Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at some of the top stocks that were in play today. And so first up is ticker symbol ANW. Okay, so this was the big winner, closed up over 200%, very big move today. As you can see, it started off with a big gap up open. The close on Friday was down here, and the open, was way up here above 160. It ran up to the 50-day simple moving average. It's the green line. So that's going to be the key level to break tomorrow. If it can get above 206, the 100-day simple moving average at 235 will be the next target. And then if you look over here, there's a gap between low of day on this candle and high of day on this candle. So a break above the 100-day simple moving average would put the 280 level and the top of the gap on deck. Now, if it stalls out at that 50-day simple moving average, this EMA4 down here at 121 and this high close here on the 6 will be the key levels to hold on a pullback. Okay, take a look at DFBG. Another big winner today, closed up 57%. It did pull back after the big gap up open. The open was up here just above 625, and it pulled back with the candles working back into the bands. Closed right here at this purple line. That's the upper Bollinger Band. The key level to break is going to be this closing price here on the 27th. It's going to have to get above this 550 resistance zone to head higher. There is a gap between low of day today and high of day on Tuesday, and so there could be a pullback down to this bottom of the gap level if 550 resistance fails to break. I mean, the chart could still remain bullish, and that gap could fill. Now, as long as this EMA4 at 391 is holding, the chart is super strong. Okay, let's look at DFBG on the 15-minute chart. You can see after the gap up open, they dropped it real fast and then pulled it back. Right now, the big level to hold's over here on the 29th. That's the high close here, the green line. It would be, best if it bounced off of that. If that broke, you would have the 50 simple moving average at 435 is the next key support level. It has to get above that middle Bollinger Band at 532 to get a new to get a new uptrend going on the 15-minute chart. Okay, so it is in an uptrend on the daily chart. Okay, take a look at BBOX here, closed up 26%. So this is a bounce play. Look at that crazy candle on Tuesday. That was a huge drop. And notice how it closed at low of day on Tuesday as well. And then you could see here that was a closing Marubozu candle, no lower wick on Tuesday. And then you could see today that there's no lower wick as well. The last trade on Tuesday was low of day, and then today low of day was the first trade of day. So that's just kind of interesting. The candles did try to work back into the bands. It hit the lower Bollinger Band here at 124. You can see that was high of day. That signaled a little temporary climax, and the share price pulled back. Keep in mind, when you have a dead cat bounce, this is what we call a dead cat bounce play, and the candles are well below that lower Bollinger Band. When they come back up, they have to break EMA4 resistance. If they come up and fail to break that level, that's always the sell zone. Okay, so you have to be careful with dead cat bounce plays because they dropped for a reason, and dead cats, after they bounce, they fall back down to earth. And so, as you can see, it had the nice bounce down here, and then got above the middle Bollinger Band. It tried to hold it, but here at 215 it dropped back below, so it has to get back above 106. If 106 remains resistance, you could see it work its way back down, to these lower levels. 75 down here was the open today. So it's just real important for this type of dead cat bounce play that if you're long, if you're going long, that you don't hold if the 15-minute chart turns bearish, especially if candles are forming below EMA4. The candles are working back into the bands, but it does signal that there is downside risk. Okay, let's look at PRAN here. Closed up 25%. You can see it came up and hit the key resistance levels. The red and blue lines are the 200 and 300-day simple moving averages, and so it has to break above that 260 resistance zone to head higher. If it fails to break that level, it could come back down here and test the 100-day simple moving average at 217. That'll be the key level to turn into support. The last close above the 100-day simple moving average was way back here in January, and so it'd be bullish if it turned to support, and then it has to get above that 200 and 300-day simple moving averages to head higher. It's trying to get a new uptrend going. If it fails to break resistance, the candles could work their way back into the bands. As you can see, the last time a candle got above the upper Bollinger Band, that purple line, the candles worked back, and so the close today was above the upper Bollinger Band at 216. Okay, there was a big volume spike today. So above 260 signals more upside potential. Fail to break the 260 resistance zone, and you could look here at this close. If it were to drop below 230, you could see it come down here and test this, 207 to 217 level. Okay, let's look at PTIE here. Closed up 20% today. Nice, another dead cat bounce. It came down here and had the big drop, and then notice that there was a giant volume spike here. So this is looking like bounce players loading down here. There's a gap between what was it up here on low of day. This is actually a 4-price doji, so it's pretty much this candle right here. I guess maybe it would be the bottom of this. Candle would be more like it, because you can see there was a doji there, but because it looks like there was a halt. But yeah, it would be between this is the top of the gap, the bottom of this white candle, and then the bottom of the gap is down here, this upper wick. And so in order for PTIE to head higher, it's going to have to break above EMA4, that pink line at 263, and then get above the bottom of the gap. So it's above the pink line and then above the red line. If it closes above the red line or breaks above intraday, it could get a run up here to that EMA8 at 379. Now, if it fails to break these levels, that's going to signal more downside risk. It's always a risk to hold anything long that closes below EMA4 on the daily chart. Now, if you look here at the PTIE 15-minute chart, you can see it came up and it hit this high close over here on the left. You can see on June 27th that this closing price here, just below 267, was the key level to break. It came up and hit that level today, and you can see that was the temporary top. You can see it had the climax spike, and then it pulled back, held EMA 13. Then it came back up and it hit that level again, and you got another climax spike type of thing. We have the volume spike, they pulled it back, and so it keeps failing to break the key resistance zone here. And so if it can get above that's that 267 level, that should signal it wants to head higher. If it starts closing above that level. Now, if it fails to break 267, even 262, that was the high close intraday today, 262.5 or whatever. Then the key level to hold is going to be 255. If it dropped below 255, that's when you're going to know the chart's breaking down. The downside risk here is that the share price pulls back, failing to break resistance and test the 50 simple moving average at 230. So yeah, above 267 signals upside potential, below 255 signals downside risk. Okay, let's look at GBR here. Closed up 20%. So yeah, that was a nice bounce. It had a interesting day here. What happened was that there was a gap between high of day on this candle and low of day on this candle, and so the red candle on Tuesday, this big red candle, came down and filled the gap, and you could see the gap fill there is a climax event. And so many times when you get a gap fill, that signals that a potential bounce could happen, for a downward gap. And so that is what happened here. It had a nice technical bounce, and the close was back above EMA4 at 481. And so that's going to be the key level to hold. If it stays above 481, and notice how that's lined up with the bottom of the gap, that's going to signal that it could head higher. Now it's going to have to break above the top of the gap here and above that $6 resistance zone. If it dropped below 481 here, the downside risk is EMA 8 here at 398 could be tested. To the upside, if it gets above 6, look for a possible run up there to $9. That's the upside potential, is it coming back up and retesting this high. So it's going to be right now all about, above the top of the gap signals upside potential, and below the bottom of the gap signals downside risk. Check out the GBR 15-minute chart. Look at that tight trading range today. I mean, the trading range range was completely sideways today, the whole day. Look at that. And so this is wound tight. I mean, the Bollinger Bands are so tight here. You know, you have the upper Bollinger Band at 525 and the lower Bollinger Band at 478. And so one of the two are going to break. A break above 525 is going to signal upside potential. A break below 478 is going to signal downside risk. It has to get above the 150 simple moving averages, above the green line, above 614 to signal upside potential. If it did, you know, up here is the high close from the second is way up here near $12. Now, if it broke down to the downside risk is it comes down here and it tests the 200 simple moving average at 375 and possibly the 300 simple moving average at 297. So when the charts it has very tight Bollinger Bands like this, it signals that a move is imminent and that you know, you should see a break from this pattern early in the trading day tomorrow. So keep an eye on it. Okay, look at ONTX. Closed up 20% today. Yeah, this was a nice bounce. You know, it came down here. Look at the light volume over here. They walked it down on very light volume. You know, there were just no buyers. And they just staircased it down, and then today it bounced and it closed above EMA's 4, 8, and 13, the pink line and orange lines, and then it also closed back above the green line. You know, this had been support. You know, there was a close above over here on this white candle, and then you know you could see these candles were staying above, and then finally there was a close below here on the 25th, and so it had turned into resistance. Now the candles are back above. So if the share price can stay above the 50-day simple moving average at 43. That's going to signal upside potential. You know, that's the stop loss level. If it dropped below 43, that's going to signal downside risk. It needs to stay above, and then to the upside, it needs to break that middle Bollinger Band at 50 cents. If it fails to get above 50 cents and turn the level into support, you know, that would signal that this new downtrend is going to continue, more consolidation. If it gets back above 50 cents, it could get a new uptrend going. Okay, take a look at RGSE. Big move today, closed up 32%. So this had a very nasty drop. You know, it was you know, way up here at $1.30 or so. I mean, it even hit up here. What was it, $1.35, and it pretty much just went down and then fell off the cliff here last week, and it continued this week until today. There was a bounce today. It closed above EMA 4 at 51. So if you're you know, we're trying to catch the falling knife, or if you started playing the dead cat bounce today, the big level to break is going to be, or to hold, is going to be EMA 4 at 51. That's the stop loss level. If it drops below that level, that's going to be a sell signal. If that level holds, then what you're looking for is a break above EMA 8 at 61. If it can get above 61, then it could possibly run up there to EMA 13 at 71. Now if it fails to get above that EMA 8 level, you know, that would be a red flag, and it would definitely be a major risk to hold if it dropped below 51. Today, a bullish one white soldier reversal pattern did form, and so keep an eye out for a bullish reversal confirmation. Another white candle, you know, would be confirming that pattern. Okay, take a look at ABIL. Closed up 23% today. This had a 4-day pullback or a 5-day pullback on light volume. Check out how there was you know, really big volume over here on the push up, and then look at the volume on the walk down. It was super light volume, walked it all the way down from you know, 12 back down to 6, and so it found support here on the orange line. It bounced right off of EMA 13. It bounced off the blue line here on the 27th. That's the 300-day simple moving average. If this $6 the $6.50 level, just to keep around numbers there, if that level holds, then that's going to signal that you know, this bounce play can hold up. It's in an uptrend right now on the daily chart. An uptrend started on this candle right here when it broke above the dotted purple line. This dotted purple line's the middle Bollinger Band, also the 20-day simple moving average. You can see how all these candles were failing to get above that level. You know, they were failing, and then finally, boom, this candle got above, and then there was a nice rally. And so right now, as long as that middle Bollinger Band down here around $5 is holding, which is lined up with the 200-day simple moving average, the uptrend's intact. But when candles get above the 300-day simple moving average, that's the blue line there, it becomes the line in the sand. You only want to be long if the candles are staying above. If they were to drop below, that would be a sell signal. Okay, so right now it's back above EMAs 4 and 8. You want to see those levels hold. If you want to keep it really tight, you know, a drop back, a close back below EMA 4 would signal that the chart is breaking down again. It needs to stay above that level, and you're looking for a retrace back up to $10 here. Okay, that's the closing price on the 25th, and so that's going to be the you know, that'll be the big level to break, you know, heading forward. You can see that was high of day today. You know, if it can get a push above that $10 level, then you have the $12 level from the 26th. Okay, take a look at DAC here. This has got a really nice uptrend going. I've been alerting this, and it keeps pushing higher. Look at the big volume. You know, it's getting pretty parabolic here. You could see it's pretty frothy here. You have RSI now at 76. Above 70 is overbought on RSI, and then you have Fasto up here at 93. You can see the black line is pinched with the red line. If that black line crosses over the red line to the downside, you know that will be a signal that the chart is starting to cool down here. A temporary pullback could happen, and so what we're looking for on the daily chart here is EMA 4 at 219. As long as that's holding, this chart is super strong. If they were closed below, there could be a pullback. There's a gap down here between high of day on this candle, which is at 190, and low of day on this candle at $2. So the downside risk is if it drops below EMA 4 there, it could come down here and drop down to 190 and fill that gap. Okay, so since it's pushing higher, the key is to look at the weekly chart, and you can see this week it pushed above the gold line, which is the 100-week moving average. And so yeah, it has a very nice uptrend going here. It's pushing really hard. It's hitting a key resistance level from July of 2017, so it needs to break this 260 resistance level. If it does break above, then you have this whole 200 and 300-day simple moving average, and you know, the 340 to which is the high close from November 2016, and the 200 and 300-week moving averages all in this zone between $3.40 and $4, and so that would be the target on a break above 260. You know, if EMA 4 is holding and staying above the 100-day simple moving average, then the uptrend's intact on the weekly chart, and it's signaling that, you know, to keep riding. Okay, let's look at SDRL here. Closed up 13% today. Yeah, this thing got hammered. Okay, so they drove it way down and did a reverse split. So yeah, $200 a share. It wasn't trading at that. But you know, it was a penny stock, and they drove it down, and they had a crazy big reverse split. But the interesting thing is, look at the volume. I mean, this is some big money flow. You know, 3 million shares traded today at $21 a share. I mean, this was a total penny stock before, you know, that did not have that type of money flowing through it. You know, that's a lot of that's some serious cash right there. So if it was back at the penny stock level, it would have been an insane amount of volume. And so this is something to take note of. A bullish reversal pattern did form today, bullish Harami reversal pattern, and so be on the lookout for confirmation of that pattern. The last two candles did form below the lower Bollinger Band, which is currently at 25.61, and so the candles could work back into the bands here. There is a gap between low of day on the first and high of day on the second, and so you could see the candles work their way back up here and try to fill this gap. EMA 4 is way up here at 33. Keep in mind it's coming down fast, but for dead cat bounce plays, you know, that's always the target. It will be tough, though, keep in mind, to break above this 25 resistance zone, but that's still you know, nice you know, gains in between this level and 25. And to the downside, if it dropped below the close from yesterday, that's going to signal downside. Right now it's already risky. It's a very risky trade. You know, it's a dead cat bounce play, but you know, it's got some big volume here. here, and it's trying to get a little bounce play going. They reverse split for a reason, because they're going to be selling more shares, so keep that in mind. Look at the 15-minute chart here. Once again, we have these very tight Bollinger Bands. You can see the Bollinger Bands were super wide over here, and then they've gotten super tight, and so this signals that a move is imminent. This very tight channel, and so a break below basically 2050 is going to signal downside risk, and then a break above 2238 is going to signal upside potential. So you want to see a break above the channel, and then above this green line here, which is the 50 simple moving average at 2380. That would be very bullish. If it got above that level, that would be signaling that the bounce was happening. Now if it dropped below $20, that's going to signal downside risk, and the risk is it comes down here and tests this level down here around $17 or so. And so yeah, so keep an eye on SDRL, and then a couple more just real quick. IMLFF, keep eye on this Canadian marijuana sector stock. It's been on a multi-day run here, bounce, a multi-day bounce, 5 days in a row. It did close above the middle Bollinger Band, and so if that level does hold, currently at 64, a new uptrend could begin. If it drops below the middle Bollinger Band, it will signal the top of the bounce and a risk to hold. As you can see here, it's been getting above the middle Bollinger Band and failing to stay above that level and dropping lower. And so if that pattern continues, you don't want to be holding. But if that level holds and it turns into support, then that would be a bullish change in trend, and then you have the moving averages lined up here above. Those would be the targets. Okay, take a look at OREXQ. It used to be OERX, traded on the big boards, and then it dropped down and to the OTC. Yeah, it had no volume at all. It still doesn't have any volume. It did have a big drop, and then today it closed above EMA 4 at 4 cents. So if it stays above 4 cents, it could possibly get a little bounce going here. Keep an eye out for some volume. If it drops back below 4 and closes back below EMA 4, that would make it a risk to hold for any bounce players that are playing this. EMA 8 at 5 cents is the next key level to break. Okay, thanks for viewing this video. If you'd like to learn more about charts and technical analysis, please come check out the chat. I'll post the link below the video. Thank you.